Happy Halloween, everybody! I'm actually just kidding. The state of our nation is too scary. I don't need any more frights. Welcome to another episode here. We are going to start pushing more content out here, seriously. If you follow my Instagram, if not, please go to Instagram, same name, let's go Brando, same way with the zero at the end. We are pushing a lot more daily content on there, and next week I am interviewing two prominent people, up and coming prominent people in the crypto world. One of them has created a trading signaling app. The other one is creating a options market on layer 3 Arbitrum. I know. What? There's a layer 3 now? Yes, there is. We will dive into that and more on my Instagram. I will go live Monday and Wednesday at these interviews respectively. And additionally, I will put the polished version of those videos here for you guys to enjoy. However, once a week, maybe multiple times a week, we are going to be pushing more content here on YouTube. We're going to try to keep it within under 30 minutes, and we are going to hit on really 3 topics every episode, okay? We're going to talk about the regular financial markets. I know we're a crypto channel, but we're a crypto channel and we're also broadening out. There's a lot of things that happen in the traditional financial world in TradFi all the time that is worth noting and does overlap into crypto, especially as these two worlds continue to combine. Then we will move on to a crypto segment where we'll talk about what's going on in crypto, at least the main talking points there. And then we will dive into, frankly, whatever the hell's on my mind. If you don't like that part, fine. Just come here for the first 2 parts with news. The third part is very blatantly a subjective view of things. It's whatever is on my mind for the week or for the day. It might be a rant. It might be an intellectual discussion. It might be a combination of the 2 things. So that's just the format. That's what we're gonna do. Leave comments and questions if you have them. And otherwise, let's get to it. So it is Halloween. It is October 31st, time of recording. And it's earnings season for the traditional financial markets. The large companies, at least, are reporting pretty decent earnings. The S&P's kind of break even in terms of overall companies beating earnings or not. And frankly, that is a little more accurate to the reality on the ground. Those of you who are in middle class and lower middle class understand that things are still really tight. There's money going around. People have the money to spend, generally speaking. But we don't really feel it in our pockets. And that's because everyone's pulling out every last dollar to keep spending and keep their lifestyles up. So savings are dwindling, credit cards are skyrocketing, but the money is somehow pouring in, especially in corporate America. Markets were down today a little over 1% across the board. Why? Well, I think it's a combination of a few things. Election jitters, we'll get there. That's going to be our special topic today. We'll get there. I also believe these earnings, as we're about to go over, some of them are good, but outlook is a little shaky. So I think the market's digesting that. And also, just sometimes number goes down. Sometimes stock prices need to correct even in the short term. There was no real extreme strong catalyst to point to today to say this is why stocks fell. This is just kind of my gauge of where the market is. And, until the election's over and we have some certainty there, I think there's going to be a big phew from not only investors, but the world. Again, we'll get there. So Microsoft reported good earnings, great earnings, but they're lowering their guidance a little bit in cloud revenue. They're putting money in other areas like AI to continue investing. And so that's why the stock was down a little bit. Microsoft leading the pack. Facebook also was down this morning. They reported yesterday, and their big crutch was that they're spending a lot of money on AI. And that's not surprising. AI is the big thing, but they're spending a lot of money on AI, enough where it's starting to actually impact the price of the stock and the income that Wall Street is expecting. Amazon is up 5% today in aftermarket. Amazon and Apple reported earnings today on Halloween, and Amazon's up nicely. They are expecting a little bit higher revenue than Wall Street was expecting for the holidays coming up. Amazon's saying for this holiday quarter they're going to be bringing in 189 billion. I'm going to repeat that number: 189 billion. That's that's a lot. That's a lot of money. That's a lot. It's gross revenue, but that's a lot. And their stock popped 5% from beating expectations for the summer, for the last quarter, for quarter three. And Apple also came out with earnings. Their stock is slightly down in aftermarket, just about a percent or so. Nothing to really cry about. Their iPhone 16 products are looking quite good, at least the initial sales, but we'll see about that. Apple doesn't talk about the number of products it's sold, by the way. It's an interesting thing. They don't talk about the number of products sold, they just report the gross revenues. All right, sure. We'll go with that. But they did hit a record revenue for September. They hit 95 billion in gross revenue coming in. So whatever Apple's doing, despite them no longer being the talk of the town, right? The talk of the town technology is AI. All these mega companies are doing okay. Why is the market starting to feel like it has jitters? Why is it starting to feel like we're a little high? Maybe these things need to come down. Well, for two reasons, and that's exactly it. Valuations are really high. The last time PE ratios on the stock market was this high was in the dot-com era and 2021. We all know what happened shortly after those 2 years. We had at least a full year of a correction following. I'm not saying there's no indication that the economy is truly going to weaken and it's going to lead stock prices down. And we had very good reasons why there were stock corrections in both of those eras. However, stock valuations are high. It's harder and harder to justify paying these prices if earnings are coming in at expectations or maybe even slightly under. And the kind of the big drive of stock prices from the 2022 bottom till now, the thing that led the market off its lows was AI, right? I remember the day ChatGPT came out. I was at my old job and I saw this thing on LinkedIn, and holy cow, it could write our emails for us, right? It was one of the coolest technology things ever. It was an iPhone moment, and I still believe that AI was an iPhone moment. It was a paradigm shift in the technology that we are using moving forward, and the type of technology we are trying to develop, and companies are competing to develop and reign supremacy in. Okay, companies would just literally mention AI. Oh, we're investing in AI in their earnings calls, and the stocks would go up. Very similar to the dot-com era. Very similar to when crypto was hyped in 20 and 21. They mentioned blockchain and everything pumps. So I'm not saying we're in a bubble with AI. Okay, you begin learning and understanding the technology. Everyone gets hyped up about it. You see the potential. It peaks out. You realize that your prices, at least, are far, and expectations in general for products are far ahead where we really are in terms of consumer technology. So everything comes down, euphoria comes down, prices come down, expectations come down. People almost forget about it. And then it gets too forgotten. And then the next thing you know, after a few quarters, some really cool revolutionary iterations of the technology does come out. We see where there is potential, and it finds its market niche, and it continues to grow in a very steady rate. And that exactly happened in the dot-com bubble, and that's the best living example that there is for what I'm expressing here, right? In the 90s, the internet was coming out, like the version 1. I'm talking about Web 1.10, guys. Like Yahoo Mail was coming out, AOL was coming out in the 90s. People started to see the light about what the internet can do to the world. It peaked in early 2000, and from there, do eventually turn when they get overheated. And the dot-com era saw just a extremely sharp decline, almost 80% drawdown of where stock prices were in 2000 to where they bottomed in late 2001, early 2002. However, zoom out, okay, what are we just talked about the four biggest companies. All of them were, well, not all, almost all of them were around during the dot-com era, and now they're the largest companies in the world. They're all worth trillions of dollars. So the technological curve, the crash, and then the market niche and the realization of where the technology fits in, That growth, that chart doesn't do it right that I pulled up here earlier. You gotta zoom out. It really is like this, and over time, it far, far, far surpasses whatever initial euphoric hump that technology let out, right? And this is for anything. This is for radio. This is for television. This is for cars. This goes for probably whale oil back in the day. I mean, trains. Believe it or not, trains had their euphoric moment of in the Victorian era where we can put tracks everywhere, and that was a big bust and actually led to a mini depression in the late Victorian era. I think we're at nearing the peak of the AI. I guess that's my point.